Let's get to the final trade of the day with Mike Patton, the head trader at Funder Trading. Mike, good to see you. What's your trade?
My trade of the day is Gen Digital INC. The symbol is G as in George, EN as in Nancy. And this is a company that's been around for a few years. Basically, what they do, as far as I can tell, is they do software and technology. They're located in Arizona. But as far as the company itself goes, I did look into it a little further, and what I realized is that it looks like it's a really good bargain here. The company currently is trading around $22 a share, but I do think that it's undervalued based on its numbers. So I do think that the actual value of the company should be quite a bit higher. I'm looking at anywhere from at the lowest end, maybe $27.40 up to maybe $30, and that would be in the next 6 to 12 months. So it definitely looks like it's an opportunity to buy right now. Now, to the downside, in the event that that doesn't play out the way that I expect, I would definitely say it's time to look for an exit if the stock is trading down to about $20 a share, maybe $20.50 if you want to get out a little earlier. But I do see some substantial upside potential, so this is what I'm definitely going to be tracking going forward.
Taking a look at the chart, investors really punished that stock in February. What was behind that dramatic sell-off?
Yes. So earnings came out, and the earnings per share came out slightly better than expected, but their forward guidance is probably what the concern was. So in short, the stock came down, and in my opinion, what was actually happening is expectations were higher than what the reality ended up being. That's usually the case when you see a sharp drop in a stock. Even though you look at the earnings, you say, well, wait a minute, the earnings are better than expected. But basically, the market prices in its expectations. And then if those are not met, in other words, if the company comes back and says, great news, we're going to make more money next quarter and our earnings are up, and the market says, well, we were expecting that you're going to do double as good as what you just said. So they have to discount it down. But that does mean that the price right now most likely is fair as far as the market is concerned. And as far as the estimates go, definitely all of them have the stock valuation as being worth more than what it is now. So I definitely see a good opportunity there. Plus the fact that it's already traded up to those price points. You know, it's already been as high as about $25 a share. So that does prove that there at least are buyers that consistently were willing to buy up to that point. So now it looks like a good time to look for the bargain. And the last time we had a great earnings report for the stock, which was last year, the actual stock went from $16 and change all the way up to about $24 before the last earnings. So that gives you some idea of what type of bullish potential the stock has.
Thank you, Mike.
Thank you.
Go to businessfirstam.com for where to see our show on TV.